Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a mixed start on the last trading day of the week. The dollar swings after US President Donald Trump says he's not too thrilled with the Fed for raising interest rates. The Lok Sabha will debate the no confidence motion against the Narendra Modi government today. It is the first such vote in 15 years. Maharashtra's dairy farmers call off their strike. The state government announces the minimum rate of purchase at 25 rupees per litre. The two-wheeler manufacturer BAJAJ Auto is likely to report a strong quarter. The impact of higher taxes on profits will be keenly watched. And it's likely to be another subdued quarter for Wipro. This time around, the company is likely to meet its quarterly guidance, though. All right, let's turn to the international markets, and starting with the US markets. Trade tensions again weighed on the US markets on Thursday as representatives of the auto industry told Congress that they are opposed to tariffs on imported cars and car parts being proposed by the Trump administration. Banks and other large US stocks fell, and smaller companies that are more domestically focused climbed. Abigail Doolittle of Bloomberg News has this report.
Stocks fell in Thursday's Wall Street session, snapping the Dow's five-day winning streak, with the Dow falling about 0.5%, while both the S&P 500 and the Nasdaq dropped 0.4%. Now, there wasn't a clear macro driver for this small sense of risk off outside of a rising dollar, but there were a few disappointing earnings reports that seemed to weigh on sentiment. eBay, those shares down about 10%, the worst day since October of 2016 on a mixed quarter, plus the company reduced their full-year revenue outlook. The Bank of New York Mellon, those shares sharply lower, the worst day in 2 years on a lackluster quarter, investors wanting more growth. Other financials that fell after reporting earnings, Travelers and American Express. On the positive side, though, IBM, those shares climbed on the session after the company did post revenue growth, and the company really helped out by its cloud unit. Now, flipping over to the commodities complex, of course, there's been some talk here about a correction from the recent highs. Much of this coming from copper. In fact, from its recent highs, copper nearly in a bear market. And oil volatile recently, too. In fact, in Thursday's Wall Street session early on, down 1%, reversing that up 1%. So that by the end of the day, the Bloomberg Commodity Index down just flat. At midday, President Trump came out in an interview and criticized the Fed's recent rate hikes. And that did cause some intraday volatility for both bonds and for the Bloomberg Dollar Index, the U.S. dollar. But by the end of the day, there wasn't much of a lasting impact in what turned out to be a modestly risk-off session. In New York, Abigail Doolittle, Bloomberg News.
All right, we're joined live now by David Inglis in the Hong Kong studio. David, just taking from that last point that Abigail mentioned about the comments by Donald Trump on the dollar, and in fact he also mentioned the Chinese currency and the fact that it has depreciated and that it's affecting American trade. Is that a big talking point today, the currency, and also the kind of crack that you saw in the commodity space?
Well, put it this way, those two things are connected. It seems like commodity markets are looking more for their cues when they look at the Chinese renminbi more than the US dollar, if that makes sense. I mean, if you try and strip out, say, the dollar index from the move, say, in an inverse, I don't know, offshore renminbi against the dollar, and you track those moves against, say, the Bloomberg Commodity Index, you will get to see that commodities are mirroring the weakness in the renminbi more than they are actually just simply looking at dollar strength or as a function of dollar strength. That's one part of the equation. The other part that you mentioned, of course, Donald Trump. I mean, he wasn't happy with the rate hikes, and I guess he was alluding to the fact that it is strengthening the dollar, and you are getting the weakness right now in the Chinese currency. And you look at the fixing out of the PBOC today. I mean, you can almost smell the smoke coming out of the White House. I would imagine he won't be pleased. Looking at these moves today, it was a weaker fixing. It was weakened the most since June of 2016. You get an immediate adjustment lower again in the Chinese currency. So I'm looking at the offshore right now. We're back above 682. In fact, we're now closer to 683 on the offshore renminbi. The onshore is at 680 right now. But again, the story, I mean, that's the renminbi story. The dollar story is also pretty much intact as well, because it is gaining against most Asian FX at the moment. So That takes me to our sort of weekly look. It hasn't been a good week for Asian FX. I guess you guys have been talking about that already there in India as it pertains to the rupee. As it pertains to equity markets, we are poised for a fifth weekly decline in the last week. In the last 6 weeks, we were up last week, but almost completely erased or undid those gains that we saw last week. Oil's been on the down. And as I alluded to, you look at the likes of copper, for example, falling below or breaking below 6,000. So the pain is really being felt. And I think as it pertains to what the market story is today, I'd continue to follow the metals indices or the metals prices, and also, of course, where we go here with the Chinese currency. In about, what is it now, 9:35 Hong Kong? So in about less than about 90 minutes from now, we get the fixing, the HIBOR fixings here in Hong Kong, which to some extent might give you an indication whether or not the PBOC is in the market here, trying to, I guess in a lot of ways, stamp out short positions. We'll see. We haven't seen it yet. Back to you.
All right. Thank you so much for that, David. Well, that is a big talking point. The depreciation of the Chinese currency against the dollar is being closely watched, with observers wondering if it isn't a reaction to the Trump administration's recent aggressive moves on a trade. Listen in to this conversation that Bloomberg had with Leland Miller, Chief Executive Officer of China BAJAJ International. It'll probably help set things in context.
China's not devaluing the currency. They're just not stepping up to prop it up. So right now, when they want to stop this continually weakening currency, they're going to have to use some major ammo. 6-7 may worry markets, but it's not the place where the PBOC wants to step in to stop this. So you have some pivot points coming up, but not yet 6-7.
So you say there are some pivot points coming up. At what point does China step in?
Well, they want it to be slow, but I think the two critical numbers, one's 6.9, and 6.9 is the number, above 6.9 is where President Trump inherited the yuan, and if it gets any weaker than that, then it means that the yuan has weakened on his watch. That's not a good symbol. It's something that the Chinese would really be prodding and poking President Trump if they do that. The second is a 7 handle, and I think that, you know, for all the talk about this ridiculous yuan basket that the Chinese mark against, they don't market against the yuan, against the basket. It's a yuan dollar trade. There's some very political numbers out there, and 7 is foremost among them.
Interesting you say that, because I have a chart of the yuan versus the basket, and what you see in it is that the yuan is actually largely stable against the basket of late, but the real decline there came a couple of weeks ago. So putting aside whether it's managing the currency versus the basket or the U.S. dollar, at what point would a weakening yuan overall prompt capital outflows out of China? Because that's the other concern here.
Well, it's probably, it may not be 6.9. I think 7 has a big number. There's a lot of talking right now about how the Chinese have just let it go. And you'll see 7 and 7.2 and 7.5.
7, just to be clear, you're talking about 7 yuan per dollar,
right.
And right now it's at 6.775 yuan per dollar.
Right.
Okay.
And I think that for all the talk about the fact that the Chinese have let it go, they have not. There's an understanding of Beijing. There are some people watching in Washington. If you pass 7, this is not just a milepost. This is a declaration of currency war.
Okay, at what point would it be a threat to financial stability, or it's really in the path forward? As long as the trajectory is gradual, it's not really a threat.
I think if you get near 7, you pass 7, you're in serious trouble. The Chinese have issues with ensuring financial stability. They want to make sure that they're sending the right signals, that they can handle a trade war, that their economy's strong. If you start weakening past that, one, you're going to go on President Trump, but you're also going to probably hit the outflow button and start really worrying people.
Meanwhile, you are seeing a record number of corporate defaults in China, and you're seeing China kind of step in and ease a little bit to offset some of these defaults. How should we view that? Is that a sort of the threat of a disorderly sort of unwind of the incredible stimulus they've put out there?
Yeah, I would say step back to the 30,000-foot level. Yes, there are more corporate defaults, but this is a very tiny number because it's China. You know, it's not a problem yet. What we're actually seeing, and we saw this in our second quarter economic data, things are not as bad as the Chinese have been talking about. What usually happens is the Chinese don't admit weakness until they've already stepped in to remedy it. So what you're seeing right now, all this talk about easing rates and more lending, we're already picking that up. We picked it up 2 months ago. So this is already happening. The economy is not as weak as people think it is right now. There is more lending going on. There is more spending going on. There's less retail weakness than people think is going on. So things are not great, and there's the trade war looming ahead. But this is not an economy that's on the tilt. It's in deep trouble right now.
All right, clearly, long story short, that's one number that you have to watch out for today. That's the Chinese yuan. With that, let's turn to Agam Vakil, who's here to tell you about what to look forward to today in the Indian market, and also to look at the futures and options space and to glean something from that. What are you picking up at the end of the week,
Alex? Right at the top, it is going to be the yuan and how that impacts metals and perhaps our own markets in general overall. That said, when it comes to the SGX Nifty at this point in time, it's absolutely flat. No cues coming in because of the mixed trends that we are seeing in Asia. And when it comes to trade yesterday, it was another step back for the indices, with the Nifty down by as much as 23 points. Mid cap and small cap indices down as much, not too much to speak for. It's the same for the Nifty Banking Index, which moved down by as much as 0.3%, but the PSU Banking Index advancing. And among other sectors that were buzzing, we did see some gains in FMCG index. On the other hand, losses for a change in the Nifty IT index after some profit taking coming through in the mid caps. Nifty Pharma, on the other hand, continues decline down by as much as 1.5%. In ADRs, more weakness in something like a Dr. Reddy's or ICICI Bank. Not too much to speak for. Otherwise, in several of the other stocks, we do have some gains coming in Vedanta, Wipro, and Infosys. We'll be watching out for Wipro as it comes out with its earnings today. And moving on, in terms of institutional flows too, we really haven't seen too much out there. It's about 316 crores worth of outflows on a net basis for FIIs. DI is around 470 crores coming in. And when it comes to contribution, we are keeping an eye on something like a Reliance Industries along with ITC, and to a certain extent HDFC Bank, lending support to the market. But Kotak Mahindra Bank coming through with some weakness after its earnings yesterday, followed by L&T and HDFC bearing down on the indices. Coming down to the future space, well, again, we do have unwinding coming along, more longs unwinding. The same for the Nifty Banking Index. Let's pull that out as well. There it's the same case. And when it comes to the changes in open interest across various options, it is the 11,000 mark which continues to remain active. In fact, we've seen a lot of addition here around the 11,000 call and 11,000 put, which makes me wonder if traders out there are going long on a straddle at this point in time, expecting some more volatility to come. That said, in terms of maximum open interest, that continues to remain with the 10,800 put, and Max OI has once again shifted back from 11,100 to 11,000. So watch out for that. That's the call that I'm talking about. Put call ratios, of course, have edged lower. Not a substantial change at around 1.63 for the Nifty, and for the Bank Nifty, it remains unchanged at 0.85. Once again, watch out for Adani Enterprises and Adani Power. They continue to be in the ban, and among some other stocks I'm watching out for Ashok Leyland continuing to move downwards. Are we likely to see some recovery today? Well, let's wait and watch. PVR, of course, seeing short covering after a considerably volatile week last week. And that said, finally, Just Dial will also announce its earnings today, but we're starting to see some fresh longs building up before the earnings. So once again, Alex, it'll all be about earnings, but largely perhaps the metal sector will be in focus on account of the currency.
All right, and speaking about currencies, let's take a check on the rupee in the bond market. Saloni Dhanuka is here to tell you all about that. Saloni, what are you picking up?
So the rupee yesterday was tracking losses in the Asian currency market, and it weakened past the 69 mark and versus dollar to close at yet another record low. Now remember, the home currency fell sharply by nearly 43 paise or 0.6% yesterday versus dollar, its biggest single day fall since May 29. Dollar strengthening overseas along with weakness in Chinese currency largely weighed on the rupee yesterday. Traders believe that RBI did intervene in the currency market to stem the rupee fall when the home unit breached the crucial 69 mark. That apart, speaking of the bond market, sovereign bonds declined yesterday for the second straight day as yield on the 10-year benchmark security fall nearly 3 basis points to end at 7.78%. Well, in terms of global funds, they reduced their rupee debt holdings yesterday. That's according to NSDL data. On the global front, dollar pared most of its initial gains after US President broke the White House tradition by criticizing the Federal Reserve, saying that he was not happy with Fed's interest rate hike decision. That apart, Chinese yuan weakened to a one-year low yesterday versus the dollar. Now remember, it has fallen close to 4% last month on the back of trade war fears. Elsewhere, euro and pound both slipped in trade yesterday versus the dollar. And lastly, speaking of dollar rupee, now it is trading at 68.90 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. Let's shift to commodities now, and that has been the big talking point. In fact, the movement in the metals space. To talk about that, we have Jayesh Kilani joining us this morning. Morning, Jayesh. What are you picking up there?
Morning, Alex. Metals have been buzzing, but let me start off with crude oil prices because that has seen extension of gains that have been coming about in the last few days. So currently, if you look at the screen, crude oil is trading about 7/10 higher after back-to-back 1% surges that we saw for Tuesday and Wednesday as well. Now, if you look at the news that has come in, Saudi Arabia has in fact dismissed the oversupply speculation, saying that this news is without basis. Now, what has also aided to the prices of oil is the dollar index. Now, though the dollar index has been strong, but yesterday we saw that the index, dollar currency, in fact, paired the biggest gain in a week now after Donald Trump's statement. Now, moving on to the base metal space, the LME base metal index, in fact, posted its biggest loss in over a week. And, the resumption of the downside seems to continue now. All base metals except for tin declined, and we had copper, which in fact slipped through $6,000 a metric ton for the first time in over a year. Now, some of the other base metals like zinc and lead are also trading near 12-month lows as well. So on the back of this, we had zinc, nickel and lead, which declined more than 2% in trade. On the other hand, we had aluminium and copper, which also saw a cut of about more than 1% each. Now, if you look at the Shanghai Futures Exchange, base metals are in fact trading on a mixed note. Last time I saw that Shanghai Steel was positive, while the other base metals was negative. Now, why the steel positive is because it has in fact touched a 4-month high on account of the supply curbs that have been imposed. Lastly, gold prices have now shifted to a 1-year low on the back of traders pricing in another rate hike.
All right, let's move on now. Thanks so much for that, Jayesh, and talk about an interview that we did with the Chief Economic Advisor, Arvind Subramanian. He believes that a resolution and reform is critical to bank recapitalization. Speaking to Bloomberg Quint's Ira Duggal, Subramanian said that he stands by his idea of tapping the RBI's reserves to recapitalize banks, more so now than ever before.
There are, I think, two kinds of, or at least two kinds of banks, right? Those that are perhaps not so viable in the long run, and those that are fundamentally viable. And I think we do have a PCA framework to address the first category, essentially that progressively you want to slowly but progressively shrink the balance sheet of these banks in the PCA. Then you talk about, the other banks, what needs to be done. But you see, remember that when you talk about recapitalization being delayed, it seems to me that recapitalization cannot proceed, without the resolution and the reform. After all, if you pour in money into banks and you don't see things improving going forward, that's kind of money down a black hole, right? And so I think that to say that it's been delayed, I would put it more as, did we do everything, all the necessary complementary actions, quick enough or not? I think that's the question, not whether one component was delayed, because I don't think you could have put in money 2 years ago if you didn't have the recognition, if you didn't have a resolution framework, if you didn't have a reform framework. So I think all of these have to go together. But I think the question is a legitimate one, whether the system as a whole perhaps took longer than it should have to address the twin balance sheet challenge. But that's something that we need to reflect upon going forward, try and understand the lessons and be honest in our assessment, both the government and the RBI.
Sir, I take your point, but I think, at this point in time, the capital is required to be able to proceed with the resolution. We are dependent on the IBC, yes, but banks need the capital to be able to make the requisite provisions, etc. So there was an idea that you had pushed in 2 consecutive economic surveys, which was to dip into the RBI's reserves or change the nature of the RBI's reserves and get capital out of there to recapitalize the banking sector. Do you stand by that idea, sir?
Even more so now, even more so than I did earlier, especially when you see, how bold and courageous, central banks have been in the post-global financial crisis era. I think that's certainly something that I stand by, and I still think that's a very viable, plausible ingredient for the overall reform of the twin balance sheet challenge. I think that has to be one important component of it. In fact, if you read the latest thinking on central banking theory, I think there's some really, really radical ideas out there, and using bank capital to recapitalize the banks almost seems boringly conservative by today's, daring being exhibited in central banking.
Over to earnings now. Bajaj Auto is likely to report a strong quarter this time around. However, higher taxes are likely to keep profits in check. Yash Upadhyay sums up the street expectations from this two-wheeler major.
So we are expecting a strong quarter when it comes to Bajaj Auto. Their top line is estimated to come in at about 7,800 crores, which is a 41% growth on a year-on-year basis on the back of that strong 38% growth in the volumes. Margins too are seen expanding by nearly 300 basis points on the back of a higher share of three-wheeler sales and the price hikes announced by the company in the quarter gone by. Net profit too is seen reporting a strong 35% growth, coming in at about 1,250 crores. Apart from that, we would also be looking out at the management commentary with respect to the demand outlook for three-wheeler sales in the domestic market, and also how the demand is panning out in the export market, along with the pricing trend in some of the key markets.
Well, the other nifty major reporting earnings today is Wipro. Has had a rather subdued year so far with regard to the stock price, in fact declining about 13% on a year-to-date basis. Agam Vakil is joining us. Agam, will Wipro manage to stick to the guidance that they gave in the previous quarter?
Well, it's likely, Alex, but we have to remember that traditionally the first quarter has never been that good for Wipro, especially when you compare it to its peers. So let's start off with our expectations, and we are looking at a decline of around 2.1% when it comes to its IT services revenues, and this should largely be in line with its guidance, where the range was remaining flat to a negative 2.3%. That said, when it comes to its revenues in rupee terms, that's expected to rise around 1.5%. EBITDA margins could see a growth of around 15.6% as against 13.7% sequentially, and profit could rise as much as 9.7%. Now, you may ask as to why we're expecting an expansion in margins and still calling it a subdued quarter. Well, this is because the company has taken up some provisioning over the previous two quarters to counter the effect of the bankruptcy of two of its very key clients. And that's the reason why if on a base effect, we're likely to see an uptick both in operational level as well as profitability. Guidance, again, as I've already suggested, was between 2015 to $2,065 million, and we're likely to see that come through at around $2,018 million. That said, in going in for the second quarter of FY19, we're likely to see a -5 to a plus 1.5% guidance coming through when it comes to the IT services. That's the expectation on the guidance for the next quarter. That said, like I said, in terms of factors that we're watching out for is the bankruptcies and the impact it has on the top line. We're likely to see continued weakness in its HPS acquisition, and as I've said, while we could see some currency tailwinds playing out, it will also be the wage hike which will work against the operational metrics for Wipro. So on the whole, it could be a mixed quarter. On the whole, not too much to speak for. Let's wait and watch.
All right. Thanks so much for that, Agam. What are the stocks that you have to watch out for in trade today? The stocks in news? Well, Shraddha Babla is here to tell you all about them. Good morning, Shraddha.
Good morning, Alex. I'm going to start off with earnings. Bajaj Finserv, the nifty company which reported earnings. Good set of numbers coming in, driven by its consumer lending arm, as well as good growth as far as the general insurance business is concerned. So we saw revenue growth of about 16.5%, and the net profit grew by 41% to 826 crores. You also had a good set of numbers coming in from ABB India, above analyst estimates, on all counts. Whether you look at the revenue growth growth of 21%, net profit growth of 36%, or even EBITDA level performance where the margins rose from 6.6% to 7.2%. That aside, you have HATSUN agro product, which reported revenue growth of 6%, net profit growth of 7.7%, but the operational performance was much stronger, with EBITDAs rising by nearly 19% and the margins expanding by about 100 basis points. Sagar Cements is staring at a disappointing set of numbers, revenue growth of 6%, but net profit has slumped by about 42%. That's mainly because the operational profit has declined by 14.4%, so you could see some negative reaction on this counter today. Aside of earnings, you also have Alembic Pharma, which should be in focus. They have received clearance from the US FDA, and this is for their API facility in Karakhadi, so you could see some sentimental positive reaction on the back of this development. And finally, UPL will continue to remain in focus. The ET report today says that TPG has teamed up with Abu Dhabi Investment Authority to back UPL's $4.3 billion Arista buy. In fact, it also says that the Abu Dhabi Investment Authority will invest $900 million versus the earlier $1 billion that was planned. So continue to track that one as well.
All right, very quickly, thanks so much for that, Shraddha. Very quickly, there seems to be a complete reversal of what we saw in early trade in the Asian markets. The Nikkei has slipped and is now trading about 0.8% lower, and the Chinese benchmarks have also opened more than 0.5% in the red. So it's a bit of a worry in early trade this morning with weak trade. But the big talking point today in India will be the political circle. It's D-Day for the Narendra Modi government as it faces a no-confidence motion in Parliament today. Here's everything that you need to know about that. Well, that sets the context for today. Hopefully, you've got a few talking points to take into your Friday. Thanks so much for watching. This is Daybreak on Bloomberg Quint.